All right, welcome to Apollo Crypto's Q2 webinar. So it's great to see everyone here again. We do this every quarter, and we'll have a little bit of an agenda today that we'll walk through. So this is the agenda for today. Mark, maybe you will start by just introducing Apollo.
Sure. Thanks, Henrik. Hi, everybody, and welcome to another quarterly update and Q&A brought to you by the team at Apollo Crypto. I'm Marc Woodward, investment partner. And as always, it's a pleasure to be joined by Henrik Andersson, who is the founder and chief investment officer of Apollo Crypto, and who leads our investment team. So for anybody new, Apollo Crypto is a multi-strategy investment fund manager that is based in Melbourne, Australia, and invests globally. We have more than a 6-year successful track record with 3 active funds, and we are focused solely on managing portfolios of crypto assets and strategies on behalf of wholesale investors, family offices, and fund to funds. And thanks very much to the audience for attending. As Henrik said, we hold these webinars on a quarterly basis and also publish a weekly newsletter along with long-form quarterly research. So please head to our website at apollocrypto.com to subscribe and to find previous research and blog posts. The crypto markets continue to be fast-moving and exciting, so we will have a lot to cover today. As always, we're happy to take questions from the audience, so please submit any questions as early as you like through the Q&A feature, and we will answer these towards the end of the webinar. The purpose of this webinar is to inform our investors and followers and to provide a general update on the crypto markets. As a reminder, this is a general discussion and is not to be taken as financial advice. Please do your own research when considering an investment in the crypto markets. And so with that, I'll hand it back over to Henrik for his recap of the previous quarter and for his outlook of the coming quarter and for 2024. Over to you, Henrik.
Thank you, Mark. So we will start with a little bit of a recap of Q2 and the year to date. Our market perspective. We'll talk a bit about the imminent launch of the Ethereum ETF, some portfolio highlights, and then we move out to a little bit of outlook and Q&A. So this is an overview of the market year to date. So Bitcoin and Ethereum, the 2 largest assets in the space, have had a strong first half of the year, both up around 30%. Worth noting as well that the traditional markets have been strong. Just last night we had new all-time highs in both the S&P 500 index and the tech-heavy Nasdaq index. What has driven the Bitcoin market is the Bitcoin ETF launch in January. We have seen really good inflows into the Bitcoin ETFs. Ethereum was lagging for the major part of the first half of this year, but then we got that surprise approval of the first Ethereum ETF, and we'll speak about that later in this presentation as well, but it meant that Ethereum caught up with Bitcoin's performance. More recently, we have seen a sell-off in crypto markets, and we'll get into some of the reasons behind that as well. But I think worth noting is that the inflows to Bitcoin ETFs has actually held up during this sell-off. Bitcoin was down roughly 24.5% from the recent peak in this sell-off. Despite that, we have seen net inflows into the Bitcoin ETF, and I think this is a really strong and good sign for the future that those investors are still putting money into the ETF. In total, we have seen around $15 billion in the net inflows into the Bitcoin ETF. We also note that a lot of assets outside Bitcoin and Ethereum in the crypto space have performed weakly year to date. So those are some of the kind of perspectives on the market year to date. I don't know, Mark, if you have perhaps anything to add to that.
No, I don't think I would add anything there, but I mean, I think just given sort of the recent sell-off, you know, the top two cryptos are still up on the year, so I think that's a positive sign.
Yeah, absolutely. Okay, moving into what we call our flagship fund, our Australian Apollo Crypto Fund. So just a recap for those of you who are new, in the Apollo Crypto Fund, we manage an active portfolio of mostly liquid tokens into blockchains. That's what we call layer ones and layer twos, into decentralized finance, which is called DeFi, the infrastructure behind NFT and gaming, and general scaling infrastructure. There is a smaller part of primary investments in the fund as well. Illiquid pre-token investments sits at around 5% exposure in this fund. As you can see on the chart here to the right, we've had a strong outperformance since we launched 6.5 years ago. Last year, we were up close to 100%. As of end of May, which is the latest return that we have published, we were up 15.8% after fees. And that's a year-to-date figure. We continue to have a positive outlook of crypto markets. We have several investments that we have done in the portfolio that are coming to the market, that we launched a token now in the second half of this year, that we have a positive outlook for. We have a market neutral component in the portfolio that we adjust based on our market outlook, and that remains at the low level at around 5%, which means that we have a positive bullish outlook on the market. We still believe we are in this positive cycle for crypto markets. On this webinar, we like to highlight our one of our other funds, the Apollo Crypto Market Neutral Fund as well, because we have seen stronger returns in this fund this year compared to what we had last year. It's a function of the general sentiment in crypto markets. This fund is performing better now than it did last year. And we believe we will be able to achieve perhaps close to 20% net return in this fund. The returns in this fund is not as such correlated to the crypto market. We are using stable coins, which are crypto assets pegged to the US dollar, to achieve these kind of returns. I would say very consistently positive returns. More recently, we've been able to achieve between 1% and 2% per month in this fund. We are deploying the stable coins on chain, and that means we don't have any centralized counterparty risk in the fund. We believe we are experts in doing this. We have been doing this for a long time. This is the strategy that we spun out from our Apollo Crypto Fund in December of 2020. So we have quite a bit of track record doing exactly this. There are two main strategies in the fund. It's what is called a yield farming strategy, and there is a funding rate arbitrage strategy as well. It's fully on chain again, very consistent returns. So we just want to highlight this fund as well in the webinar for those of you who are interested. Yeah, so moving on to something I mentioned early on, we have seen good returns from Bitcoin and Ethereum this year, but there has been another narrative as well, and that's the weakness in what we call altcoins. So those are alternative crypto assets outside Bitcoin and Ethereum. Just to kind of illustrate that, I put the S&P cryptocurrency broad digital market X large cap index to the right here. So this is an index consisting of assets outside the very biggest assets. This index is actually year to date here down 18%. So that just shows that the altcoin market hasn't performed very strongly so far in this cycle. We believe this is most likely going to change going forward. A reason why altcoins haven't performed well could be that retail investors are not really back into crypto markets yet. That's something we believe could change going forward. For example, if Bitcoin continues to perform strongly and perhaps Bitcoin breaks 100,000, say, at some point, I think we'll see a lot of headlines kind of in media around that, and I think that kind of will fuel new interest in crypto in general. So that could be a potential catalyst, but I think there are other potential catalysts as well, and we'll discuss some of them in this presentation as well. But in generally, what we have seen historically is that Bitcoin, as the largest asset, has sort of led every cycle, and then other smaller assets have sort of lagged a little bit in the cycle, but we have seen much larger upside as well in some of the smaller assets.
Henrik, so it's probably worth I think just tackling a question that we got through the Q&A feature about the relative performance of Ethereum and Bitcoin relative to the Apollo Crypto Fund, and why Ethereum and Bitcoin have outperformed the fund. And this is sort of the answer, that the fund is a diversified portfolio. It includes altcoins and includes primary illiquid investments that are held at cost and that will start to become liquid and trade over the coming years. So it's important to sort of zoom out on the long performance of the fund versus taking any specific quarter or 6-month period.
Absolutely. That's a good point. And just as an example, April was a weak month for our funds, but looking at the average return of any crypto assets outside Bitcoin and Ethereum in April, they were down over 35%. So that's just sort of illustrate that point. And, we're looking at this S&P index is down 18% year to date. So that kind of shows you that altcoins have been really weak. We have not, we have still been active, and our response to this weakness, so we have listed a few things here that we have been active with in the first half of this year. We have increased exposure to blockchain L1s. We are listing a few of them here: Solana, Sui, Ton, and Near, where we have increased our exposure. And one of the reasons we have done that is we believe that once retail kind of enter the altcoin markets, they are more likely to go into some of those well-known names versus something more exotic in the DeFi space. So we believe there is a potential stronger performance there. When retail enters, we have disposed of some of the, I would say, non-core assets that might have had a smaller percentage of the portfolio, been more speculative, focusing more on high quality assets, kind of bigger brand names, you could say, in this space that are generating revenue and are seeing good traction. So that's what we have done on a portfolio level in response to the altcoin weakness in the first half of this year, to set up the portfolio for the second half of this year. And you mentioned, Mark, it's important to zoom out, and this is just an illustration of previous couple of cycles. We have seen pullbacks in bull markets before. It's very common, actually. There's nothing unusual with that. I mentioned before that Bitcoin has retraced 24.5% roughly. And looking at the last cycle that peaked in 2021, and that's the chart to the right here, Bitcoin retraced more than 20%, a total of 7 times. And the same pattern was true in the 2017 bull market, where Bitcoin went down more than 30% 10 times. So it's nothing unusual. Crypto is very, very volatile. We know that. Apollo's view is that we are still in a positive, we call it a bull cycle. The kind of pullback we have seen in Bitcoin, for example, now is in line with previous patterns. All right. Moving on to the Ethereum ETF approval. So again, Bitcoin got its approval in January. It's been very successful so far, the most successful ETF launch ever to happen. But the market didn't really believe that Ethereum spot ETF would get an approval. But it did happen. There was a surprise announcement in May by the SEC, where they approved the listing of the spot ETF. The ETF hasn't been listed yet, as could happen as soon as next week. So it looks likely to happen in July. And by approving the Ethereum ETF, it's implied that the regulators in the States are considering Ethereum to be a commodity. We think this is really positive for Ethereum, but also for the altcoin space in general. And it came as a surprise, so it was really good to kind of get that confirmation from the US regulators that they don't consider Ethereum to be a security. And we have done some estimations of what we could see in terms of inflows to an Ethereum ETF. Hopefully you're all getting our newsletters, you follow our insights that we published on apollocrypto.com, our website. We believe that the Bitcoin ETF could see as much as $65 billion inflow over the cycle. Bitcoin ETF will see that if they capture 1% of the US ETF market. Just comparing the market cap between Ethereum and Bitcoin, Bitcoin's market cap is around 3 times as large as Ethereum. If Ethereum gets 1/3 of the inflows that we believe Bitcoin could get, that's basically our bullish case on this chart here with a $20 billion in inflow over the cycle. And you know, we are making some assumption what that could potentially mean for the price. It's obviously very speculative, using something called a crypto multiplier or an Ethereum multiplier to sort of try to estimate the potential target price. Again, this is not financial advice, but this is kind of to illustrate what a potential upside could be in Ethereum if we have good inflows to the Ethereum ETF. Mark, I'm interested to kind of hear your take on the Ethereum ETF. Obviously, with Bitcoin, I think institutional investors are seeing Bitcoin as digital gold, if you like. How do you think they will view Ethereum?
Yeah, I think generally is the sort of the backbone of DeFi and sort of smart contracts in crypto, and certainly as the home for the majority of the capital in crypto. I personally believe that institutional investors will be interested in taking an investment in the Ethereum ETFs and having exposure to this as sort of a proxy to the larger altcoin market and sort of crypto VC space. As you know, a number of the crypto projects are early stage projects. They often list their tokens much faster than a typical startup might list on an exchange, for example. So you're seeing the price action and the valuation of these projects sort of communicated to the market much earlier than you would in a sort of more established sort of tech VC investment. So I'm certainly optimistic. I'm a big Ethereum bull, as anybody knows who's been on these calls in the past. And so I'm certainly optimistic. And I think Ethereum really hasn't had sort of the run that it had in the previous cycle. So I'm certainly optimistic about it.
Yeah, absolutely. I guess Ethereum is more like a platform, like an app store, can do many different things. Tokenization is as well a big kind of potential narrative for institutional investors.
I also think some of the investment into the Bitcoin ETF has been related to arbitrage and sort of capturing yield opportunities in the market, where I think investors in Ethereum will be more interested again in this long-term innovation cycle and capturing that capital appreciation.
Yeah, it's much more about innovation versus Bitcoin. Almost a completely different narrative, right?
For sure. And as a proxy for the rest of the market, right? So it's still very difficult for institutional investors and even retail investors to get exposure to the altcoin market. So Ethereum can be a proxy for that.
Yeah, absolutely. Will be really interesting to follow that. All right, moving on to some portfolio highlights before we go on to our outlook for the market. So one portfolio highlight is the open network, also called TON. This is a fairly new portfolio holding of ours. They have seen rapid growth. They are tapping into the large installed Telegram user base. The Telegram user base is over 900 million monthly active users. Their biggest user base is based in India, where they have something like 104 million active users. So the open network is tightly integrated to Telegram, which makes onboarding super easy for Telegram users. So far, they have onboarded over 5 million of their users. We believe that they could ultimately reach maybe 10% of Telegram users, which would mean over 90 million users. So still almost a 20x growth potential in the user base of TON. It's kind of one of the only big social networks that are tightly integrated to a blockchain. You can seamlessly send crypto between Telegram users. Telegram have these mini games as well, and some of them are incorporating crypto. So seeing really good growth there, and potentially a lot of growth ahead for TON as well. Another portfolio highlight is Swell Network. We've talked about Swell before in previous webinars. For those of you who are new, we are seed investors in Swell, and Swell is an Ethereum liquid staking and restaking protocol. They are also launching their new L2, their own L2 on top of Polygon. They'll be one of the main L2s in what Polygon is calling the ag layer. So that's super exciting to see. The TVL, or the total value locked on Swell, is over $1.2 billion in ETH. And we expect them to launch their token in the coming few weeks here. So that'd be really exciting to follow. Another portfolio highlight that we actually wrote the first check to a couple of years ago. And we recently reinvested in their latest round as well, and that's Sol Protocol. It's an omni-chain liquidity and yield infrastructure protocol. And they have seen tremendous growth in the last 3-4 months here. They have total value locked that have surpassed $1 billion, mainly through their product that they launched earlier this year called Solve BTC. So Solve BTC is available on Ethereum, but also on some of the Bitcoin L2s, and we'll talk about a little bit about that narrative as well later. But they have been very successful, obviously. And Sol BTC is basically a way for BTC holders to achieve yield on their Bitcoin. We expect Sol to generate a token and list in this quarter, in Q3 this year, and we expect them to be able to launch on a top tier exchange.
Henrik, it's probably worth answering a question that just came through, which is what specific altcoins are predicted to move the needle in this bull market. And so I certainly think Swell and Solve will have significant impacts on the funds, and probably those L1s that you highlighted earlier in the slideshow is probably
Absolutely.
a good answer for that. But do you have any others sort of on the top of the mind, any that perhaps in the DeFi market or NFT and gaming infrastructure that we like?
Yeah, I mean, we have, I think, a lot of in the portfolio that can perform very well. But yeah, gaming is not a big potential for crypto, and we have some exposures there. But yeah, the ones you mentioned, I think, makes a lot of sense.
Okay,
and
great.
I just mentioned one other here that I think will do well in the portfolio as well. And that's Walter Sig, the founder of Thorchain, recently launched this project. Apollo Crypto is a seed investor. They raised at a valuation of 10 million. You could, for those of you who are familiar with Safe, this is something that Safe is a crypto non-custodial wallet that are used by a lot of DeFi treasuries, among others. Safe is currently trading at the $1.4 billion FDV, and we expect Valtisig to perform their TG in the coming weeks. So very quick path to liquidity again. So this is a potential other investment that will do very well in this cycle, Mark. Did we get any other questions, or should we move on with our outlook?
So there are a couple ones here. So how do you judge on which L1s to concentrate on and which ones to not? And are you investing in any L2s?
Yeah, good question. So we try to follow the narratives, but also where the user base and the developers are focusing. So obviously Ethereum has shown a lot of strength when it comes to developers, but I think there are other pockets of very strong activity as well. For example, Solana, for example, Ton, which we talked about. And then there are some that are a little bit more speculative, I would say, but still have strong narratives, like Sui and Near. I don't know, Mark, do you want to speak about Near? There's, I think, an interesting AI narrative around Near as well. But that I would say is more a little bit more speculative than something like Ethereum or Solana, where we already have kind of strong communities of developers and projects.
Yeah, no, I think that's right. Near is an L1 that was launched in the previous cycle. Did a high-profile ICO or TGE, and had a very significant run in the previous cycle. I think ran up to close to $20 per token. It's currently trading about 4.5. It's hit a high of about 8 in this cycle. So certainly a bit volatile, but I think it highlights if you have a quality project with a quality team, they will find a market niche. So they're certainly seeing a resurgence in this AI narrative and building specifically to enable AI applications in crypto. Very strong community, and there's a lot of institutional interest in the project as well, and growing TVL. So it's one we're certainly optimistic about, and one we've been watching for the past year and a half.
Yeah. All right. Maybe moving on to Outlook, and we're moving to Q&A after this. So we're happy for everyone to ask the questions. This is the last slide before we move on to Q&A. So a little bit about kind of Outlook and what we can expect for the latter half of this year and going into next year. On the macro side, I guess two things that have affected crypto markets more recently is the German government, who has been selling Bitcoin that they confiscated more than 10 years ago. So they had close to 50,000 BTCs. In the last sort of month, they have been selling those directly on exchanges. They are down to less than $1 billion. So they have less than 10,000 BTC left. They've sold 80% of the BTCs already. So that's really good to see that, you know, they're almost done selling. And that's probably is one factor that has put pressure on the market more recently. We also have the distribution of the Mt. Gox bankruptcy. The Mt. Gox bankruptcy happened in January of 2014. It took them over 10 years kind of to finally kind of distribute what was left at Mt. Gox. So that's 143,000 Bitcoins. And Mt. Gox is different than, for example, FTX. Mt. Gox is actually distributing BTC and Bitcoin Cash to those creditors. We believe that, you know, many of these people have been waiting a very long time. Some of them will definitely keep their Bitcoin. They might not want to kind of incur the potential tax by selling the Bitcoin. Some of them are Bitcoin believers. So it's different than the German government kind of directly going out to the market and sort of market sell Bitcoin. These are Bitcoin, Mt. Gox's Bitcoins that will be kind of distributed to those creditors. And some of them might sell, but that might be a smaller percentage. When it comes to kind of the political landscape, I think there's been some really interesting things happening there. This year, we have seen in the US, obviously the election coming up in November. We have seen Trump really embrace crypto. It was just announced today, I believe, that he will attend a crypto conference coming up, or a Bitcoin conference. He has met with Bitcoin miners, and he's positioning himself as a pro-crypto candidate. While the current administration has been pretty bad, I would say, for the crypto industry. And, you know, people have talked about they're fighting a war against crypto. But I think more recently we have seen Democrats also some Democrats coming out being more positive about crypto. They're seeing obviously the potential voter base. There are 30-40 million Americans that own crypto. So that's a not insignificant part of the US population. So that's kind of a really interesting dynamic. A potential Trump win could be also a catalyst for crypto markets. Right now, if you're looking at some of the betting markets out there, there's over a 60% probability that Trump will be the winner in the election in November. But it's also interesting to see some of the Democrats coming out being more positive than we've heard previously around the industry. And when it comes to central banks, we still expect rate cuts this year. We've seen the ECB moved already with the rate cut. There are still expectations that the Federal Reserve in the US will cut interest rates this year as well. We had the Fed's Powell speak yesterday. There was nothing really new, but they reiterated that they can be cutting rates before inflation goes below 2%. So I think they're ready to cut. I think we'll see interest rate cuts this year. That should be good for our market liquidity and for risk assets in general.
I'd also just add that if Trump is elected, he's certainly a proponent of a low interest rate environment, and he's been very vocal about that. So we could see a confluence of positive events, a positive political shift among the administration. I would say potentially a new head of the SEC, and a low interest rate environment and higher liquidity in the market.
Yeah, absolutely. Moving on to some of the more crypto kind of narratives. We have been mentioning Bitcoin L2, so that's a very strong narrative in the market. We've been looking at a few plays there. We have some exposure with Sol, for example, that we talked about. We think this will continue to be a strong narrative. We still think it's very early days. It's very hard kind of to identify who the winners will be in this space, but that's something we are monitoring very closely. We talked about the Ethereum ETF approval and launch. Again, we expect that to happen potentially already next week. So that should be really interesting to see. It will be also interesting to see how Wall Street kind of build a narrative around Ethereum. And then I think FTX redistribution is coming potentially in the coming a few months here. So there is some speculation currently that it will happen this year. Seems to sort of be some kind of consensus around that. And it's expected that the creditors will be kind of more than fully compensated in US dollar terms. So, we may be talking about 115, 120% redistribution to creditors. Still some uncertainty around that, but I think there is over 100% at least a redistribution happening. That could be $15 billion paid in US dollar. I don't think it's far-fetched to believe that some percentage of that, potentially a significant percentage of that, will be reinvested into crypto, because these are crypto investors, crypto traders, retail that had accounts with FTX to trade crypto. Now they're getting basically money in their account. Some of that will be reinvested into crypto. That could potentially be another catalyst for retail as well as altcoins. Portfolio positioning, just reiterating what we had said before. We are focusing more on L1s because we believe that has a stronger potential in the rebound in altcoins. That's the first kind of buy for retail re-entering the market. We believe we've been selling some of the smaller, more speculative assets in the portfolio, focusing on quality, revenue, and sort of the big brands, if you can call it that, within crypto. So that's for two long funds. For a market neutral fund, as we said, we are seeing fairly good returns, 1 to 2% quite consistently in the last few months, and we should be able to achieve around 20% this year is our hope there. Anything that you'd like to add, Mark?
No, just, I mean, on the market neutral fund, I think the positioning there is for investors that want a higher rate of return than they might get in sort of cash or in a money market fund or other yield-oriented investment product. It's designed to generate a very consistent yield on a monthly and annual basis rather than have the volatility and the upside opportunity of our other two long funds. So it's, I'd say potentially a different style of investing, or for a different, sort of allocation in a investor's portfolio. I just think that's important to note when thinking about this as a crypto fund, but it's actually more of a traditional yield fund and should be compared to other yield funds rather than volatile long funds.
Yeah, very different characteristic.
And so, Henrik, so we just have a question just on the so just to go into Q&A, guys. So please drop your questions into the Q&A feature, and we'll do our best to answer them. We do have a few already outstanding here. Just on the portfolio strategy and our trading strategy, perhaps, Henrik, it's worthwhile explaining. A lot of people compare the fund to Bitcoin or Ethereum, a single asset investment, and ask, is it required that we trade those two large assets given their outperformance and certainly the dominance of Bitcoin in this cycle and in last year? How do we approach sort of market timing, trading, and holding assets?
Yeah, so this cycle has been a little bit, I would say, unusual, right? Bitcoin so outperformed last year as well as so far this year. One reason has been the Bitcoin ETF, and BlackRock applied for the Bitcoin ETF in June last year, and I think that's kind of where you see Bitcoin started to really outperform. In our Australian Apollo Crypto Fund, we have a decent position in Bitcoin right now, and it has been the case for some time now. Ethereum is kind of the largest holding there, because we think there is bigger upside, especially now with the ETF of Ethereum getting approved. So that's something we are, always sort of adjusting and reconsidering our positions in Bitcoin and Ethereum, investing more in altcoins where you think the opportunity is bigger there. We're not day traders. I think we have said that many times. We are more, fundamental investors in this space. But yeah, if we thought that Bitcoin would continue to kind of outperform the other assets in the portfolio, we would hold Bitcoin as the largest asset in the portfolio, which is not the case at the moment. We are actually now investing more into altcoins because they have been lagging by a lot, and we think the upside is bigger there.
Yeah, and I think I would just add my own sort of perspective. It's very difficult to time the markets in an asset class that has sort of 80% volatility. You can certainly be on the wrong side of the trade, and often the moves are very fast and short, right? Both to the downside and certainly to the upside. I think some studies have said if you're out of the market for 8 days, you've missed sort of 80 or 90% of the return in Bitcoin. So it's very tough to judge when you should be in the market, so trying to trade these volatile assets. We found over the long term, the buy and hold strategy is a much better one. Yeah. So another question just on the Frontier Fund. So when chatting about seed investments, what extent does that impact the Frontier Fund versus the Apollo Crypto Fund? And at what stage do these tokens start to show up in the returns of those two funds?
Yeah, so you have all new investments in pre-tokens are done through the Frontier Fund. So that's where you have the highest allocation to those investments. The Apollo Crypto Fund gets that allocation through an investment in the Frontier Fund. So you have sort of maybe 1/3 of the exposure through the Australian vehicle, but for those of you who prefer kind of the altcoin exposure and kind of the maximum exposure to P-token investments. That's through the Frontier Fund. And once those tokens start vesting to our portfolio, then you can see that markup in the portfolio. It's kind of that kind of time to liquidity varies across our investments, right? Sometimes it can be very quick. Sometimes it can take a couple of years before you kind of see any return. I think from one of the investments we mentioned here, Sig, I think the path to liquidity will be very fast, you know, a matter of a month or even weeks before you see some kind of liquidity in that token, and where we can sort of mark that in the portfolio.
Yeah, and so for investors who are looking for more exposure to the altcoin market and to pre-token projects, the Frontier Fund is one to have a look at. That will have a higher percentage of pre-token projects. It does not include Ethereum or Bitcoin. So if you hold that elsewhere or have other exposure through our Apollo Crypto Fund, the Frontier Fund could be a good addition to the portfolio.
Yeah.
So we have another question just on crypto gaming. Maybe you could chat a bit about some of the projects that we like. Certainly IMX has been in the portfolio for quite a while. Maybe you could explain why we like that and why we like the crypto gaming space in general.
Yeah, gaming is a very big billion-dollar industry, and there are very good teams that are building consumer mass market games that includes crypto. So there is a big potential there for crypto to play a role. We haven't seen kind of that breakthrough yet, perhaps. You have a really kind of game that is really good to play, and then also have that crypto component. We have seen some kind of early tries in that. At Apollo, we prefer to invest in the infrastructure, less so kind of in the application layer. So we are quite agnostic to where we will see the actual applications take off, if it's in AI, decentralized AI, in decentralized social, in gaming, etc. But we like to have that kind of infrastructure exposure, and we have that through several investments geared toward gaming. That could be through an L1 like Avalanche that are kind of have the best games today. Could be through a platform like Perion and everything that they are building around gaming, and so forth. So we don't invest in a specific game necessarily, but more in that kind of infrastructure that will benefit from the breakthroughs that I hope we'll see in the coming 1 to 2 years.
Yeah, and I think the other point I always like to make when speaking about crypto gaming is, the value proposition of, okay, well, why do games on blockchains? Why does it matter? Why don't you just do it on consoles or on your iPhone? Well, a lot of the value is not captured, by those people that are creating it. Users or gamers spend countless hours and certainly lots of money playing games, but they can't own that value. That value stays siloed in the game in the form of the character achievements and to the assets that they've created, a larger gun or a bigger sword or an avatar or a skin, as they're called. And they can't transmit that value or that achievement into other games and unlock other content. So one of the biggest value propositions of Web3 gaming is that you can allow the users to own this value in the form of NFTs and be able to trade those with other gamers, as well as translate that achievement and unlock to other game platforms. So just another question about the Frontier Fund. Any targets on performance for this year? What's our outlook for the coming second half and for next year on the Frontier Fund? I think we've touched on that a little bit. I personally would just add that we think some of the early stage projects that will start to become liquid and launch over the next 6 months will have a significant impact Plus, at this stage in the cycle, usually in the second half, as Henrik has alluded to a few times, you get an altcoin run. So as even as Bitcoin and Ethereum will do well, they will drag up the rest of the market as investors look for returns.
Yeah, that's right. It's really hard to kind of specify, target return or anything like that. Now we aim to outperform our benchmarks over time. So that's what we, aim to do in the Frontier Fund. And yeah, our portfolios have a little bit of different risk return. I would say a Frontier Fund has higher risk, higher return potential if you compare them to our other funds.
So I think we've answered all the open questions. If there's any last minute questions, please submit them. Otherwise, any sort of closing comments or anything we want to amplify in our outlook or in anything that we've covered today, Henrik?
I would again emphasize that we believe we have a strong pipeline in our portfolio. Projects coming to the market over the coming 6-12 months. That we certainly are very excited about. It's been a tough market more recently for altcoins, and hopefully we have explained some of the reasons behind that. But I think there are potentially several catalysts coming up this year as well. We talked about interest rate cuts. We talked about the political landscape in the US, the FTX redistribution, and what that will mean for potentially for crypto markets. So there is potentially several catalysts coming up as well. So it should be a really interesting second half of this year.
That's great. Thanks very much. One last question. So how do we research and find our seed investments? What's that process? How have we built our network? How do we select these investments according to the categories that we invest in?
Yeah, I think a combination of top-down and bottom-up research. So top-down, what are the areas that we're interested in? We mentioned some of them, kind of the infrastructure layer and data sectors that we mentioned. That does it fit into those categories? Is the team building something truly unique, or is it just a Me Too product of something that already exists? That's less interesting for us. And then, yeah, a lot of calls with the team and due diligence around the team. I think that's super important. I think some of the most successful investments we have done, we have seen teams that are able to pivot when they need to change gear. And yeah, we really want to kind of back our portfolio and our teams behind them and help them as well along their journey.
Yeah, I think that's a key point. The ability of these teams to be able to monitor the market and adjust very quickly, certainly much more quickly than they can in a traditional startup environment where you're building teams and infrastructure. And if you're building a product, it's much harder to change a physical product. But in crypto, you can have a very fast pivot, change the strategy, rewrite the software, and relaunch, and also experiment much more quickly because the capital is a lot more liquid. So especially in DeFi, you can launch a new pool or a new opportunity and incentivize investors to interact with your project and certainly to deposit capital. So as Henrik mentioned, both Swell, Solve, and even Maverick, which we haven't really spoken about today, have all experienced pivot, and that's a credit to the the quality of the team and Apollo Crypto's ability to identify high quality teams that will stick with the project. And yeah, so Eigenlayer is one we haven't sort of touched on. Maybe just a quick update there, and when we expect that token to be liquid in the fund.
Yeah, so I expect the token to be tradable, transferable in the next coming couple of months. So in August, September, the Eigen token will be transferable. That will start trading on tier 1 exchanges. So that's super exciting. Again, Eigenlayer, we were seed investors last year. It's been one of the most successful protocols to launch this cycle, the second largest DeFi protocol globally right now. I think there is a potential that they can unlock 100x scaling of Ethereum. So super excited about Eigenlayer still. our tokens will start vesting 1 year after the TG.
So just about TVL, or total value locked, asking if that's somewhat equivalent to the funds under management for a fund manager. Yeah, to a certain extent, I would say, but it's more of a, an expression of how successful allocators in crypto markets expect this project to be, as well as the success of the project. So TVL is one that we certainly watched, both if TVL is increasing or decreasing, and that's a good barometer to the success of the project going forward. So I think we'll wrap it up there. We've gone a little bit over time. Certainly appreciate all the great Q&A, and thanks very much to Henrik for the detailed slide presentation and the continued hard work on the funds. So we'll wrap it up there. Thank all of our investors and followers. Again, this was a general discussion. Please do your own research, and if you'd like any more information, please head to apollocrypto.com, where you can contact our team, myself and Henrik included, or have a look at some of the insights and some of the blog posts that we discussed on today's webinar. So thanks very much, everybody, and we'll see you next time. Thanks, Henrik.